Good evening, everybody. A nice spring evening here in Mars, PA. All right, we're all set to go. Okay, this is the, again, I keep stressing, this is the benefit of candlestick charts because we can see a lot more plainly what was happening down here at this wedge support area. We had a bullish Harami on Friday that told us that maybe they're not, or not maybe, but there's a high probability they weren't going to go back below this level. Market started out dismal this morning, but reversed immediately. And we kind of had that anticipation because once they took it down pretty quick, they turned it right around and came right back up again. So it wasn't like there was massive selling going on. Yeah, so where's my Easter bonnets? And everybody's supposed to take notice of Jim's picture with him sitting behind the camera. All right, what was more convincing, though, was once again the NASDAQ, after opening, immediately started trading higher. So on a visual basis, we could see this was a support area. We could also see the 50 was a support area. And as a candlestick analyst or investor, we can see we have a very strong bullish signal, a left-right combo, stochastics curling back up, and a close above the T-line. We know what to kind of expect at this point, which is if they open this positive, confirming the left-right combo, they're pretty much telling us this downtrending channel is being breached, and not necessarily meaning we're in a skyrocketing market, but at least with a target of the next few trading days back up to test the highs, which is kind of the trend channel at this point. And let's see, the transportation index was kind of the weak sister today. However, it did a doji down here in the oversold area. So it still makes the market analysis relatively simple. If we wake up tomorrow and the pre-market futures are trading positive, there's a good probability that the market's found a support level, and as we saw in the S&P, moving up from that level with a bullish engulfing signal. All right, so the other things that may be affecting the markets was, first of all, crude oil. Now it seems like crude oil trading positive or back up again isn't really a detriment to the market. It's kind of supporting one industry and slash what did the transportation do the last time we had a bounce up? Oh, AB, I have no earthly idea. There was that bounce, but it's been selling off the hardest, and we're just about at the support levels down here. What was I doing? Oh, crude oil. Crude oil, picking up a little bit of strength here, is now more of a benefit to the market. And again, this is why prices don't move based upon, it's easy for you to say, based upon fundamentals. Prices move based upon the perception of fundamentals. So right now the perception is crude oil picking up a little bit of steam is good for the markets because it's showing that that it's not devastating one of our industries, that industry is staying intact, and as long as we don't see crude oil skyrocket back up to $75 a barrel real quick, I think the market's going to stabilize in here. Yes, that's true, Don. That usually it's the transportation index that kind of acts as a leader, but that's where also we want to be able to analyze what's happening in the market in general, meaning which sectors are moving. So right now, obviously, the transportation index sector or those transportation sector isn't acting very well, but if the market continues up in the other sectors, that will probably start bringing confidence in that they aren't going to kill the transportation index too much more. When you say market trading positive on the open, what are you looking for? Prices going higher than today's high, or being higher than today's close in, let's say, the first 15 minutes? PP, if you will look at your, I want to say the indexes, or the what we call the bugs, they're usually on CNBC News, they're usually on Bloomberg, they're on some of your, like the YMs, the futures of the Dow, the S&P, the NASDAQ. If they're trading positive before the market opens, obviously we can have a good indication, the market's going to open positive. What we don't want to wake up tomorrow and see that the pre-market futures are down 150 points on the Dow, or down 80 points. If the pre-market futures show that the Dow is going to open up 25 points, or even if it opened up down 25 points, it wouldn't really show that there's any dramatic selling going on. So my idea of a positive open in the morning is that the markets are at least flat or within the range of where they closed the night before, or even trading positive, and whatever you're looking at is trading positive or flat. So what we really don't want to see is that there's huge selling going on the in the pre-market futures. So crude oil coming back up, and the reason we kind of suspected crude oil was going to come back up, notice the pattern it did. It kind of did what we call the bobble. Hit the resistance level, pulled back, but this time instead of pulling back and trading down through the T-line, on Thursday it came right back up above the T-line, supported on the T-line, and now the T-line crunched, sent it up through and or a J-hook pattern. So this is what we call the bobble, where it hits a resistance, pulls back to the T-line, and then goes back up through the resistance a second time. All right, so what was I thinking? Oh, so crude oil is acting well. Gold was picking up steam, and why do I keep getting this as such a truncated? There's the gold chart. And notice what started the uptrend, this little gap up. And then it pulled back, and notice what we had back here at the T-line, a little kicker type signal. So where's our next likely target? Well, if this is wave 1, wave 3 should take us back up to the 200. Then we'll see what happens from there. And we'll get to that here in a minute of why that's important for what sectors you want to be looking at. Interest rates, the 10-year note, TAAM. The 10-year note's still in this uptrend, which means bond prices are heading up, interest rates are heading down. Silver. Well, shuzzbutts, I'm just not doing things right here tonight. Silver. Silver, also that little J-hook. Notice what it did. It came up through the resistance level, came back to the resistance level in the T-line, said it was supporting there. Again, the next target is likely the 200-day moving average. You know, the May futures usually should be, yeah, they didn't just open up the May futures have been open for a while. What is this? This is April. Yeah, May futures. How do we trade this 10-year note? Oh, I usually trade them on the futures, just like you would trade soybeans. Speaking of which, take a look at soybeans. Soybeans is pretty much in a slow downtrend sideways, not too much there. And cotton broke out today. That's a nice little, again, kind of the J-hook pattern breaking through the resistance level. And let's think, where would you go? Well, dollar. Dollar has come all the way back. This is the June contract, all the way back to the see which, yeah, the June contract has come all the way back to the 50-day moving average. Now you watch to see if it does a buy signal here, because that pretty much tells us the 50 is acting as support and we're still in an uptrend. Yeah, you trade any of these. That's why I kind of yell out. I can't make the symbols any larger, so that's why I usually kind of say what we're looking at. And let's see, we did gold, silver, dollar. Guess that's about it. I don't think. Let's see. Wheat, and not anything that's showing any real good trader. Get a bigger monitor. I probably should. I'm so hard to see, and except we're doing this off a 30-inch monitor right now. Okay. Some of the other ones, stocks that that we keep an eye on. We had recommended GEOS a while and had to come back out of it, but as you can see, GEOS did a nice little breakout today, and kind of a double bottom. So I'd look for this to have a good little pop to it. Control Plus might make it bigger. Oh, that did something. Switching pages. Uh-oh, don't want to do that. All right. That's for watchers. Okay. All right. And INFA was one that we have been staying long as it stayed above the T-line, and it needed to break out, which it did today. So where's the next likely target? You can pretty much draw a straight line through the tops. You could draw a straight line, which means we're looking for this to move up into this area. W wave, same scenario. Nice little J-hook pattern. Still looking for more upside on this one. ANAC we recommended not too long ago. As long as this stays above the T-line, you want to stay with it. Doing kind of a J-hook type, sloppy J-hook type setup, but you came out of this fry pan bottom, you consolidated. If you are in it, you stay long. If you're looking to buy it, you wait for it to break out into new territory. That tells you wave 3 is in progress. And BONT has just been a good little steady eddy ever since the kicker signal. Remember, the kicker signal is your strongest signal. There's been a dramatic change of investor sentiment, and you stay long as this stays above the T-line, and notice how it's been using the T-line as support. Now, when I say notice how it's been using the T-line as support, you've got to remember the T-line is not something that everybody's watching. Just a very minuscule percentage of the, minuscule of the investors out there use the 8 exponential moving average. Some use the 10 simple, some use others, but we use the 8 exponential because it works very effectively. So that's to kind of reiterate the fact that when they pull back to the T-line and bounce off of there, it's not because everybody's seeing it come back to the T-line. It's because that's kind of the natural place where human nature kind of reacts and acts as support. We recommended VHC because this is where you want to observe the obvious. And the obvious is when a price moves up and then starts pulling back, where do you think everybody's waiting to see if it's going to support or not? At a major moving average, like the 50-day moving average. We recommended this on positive trading based upon the big morning star signal. Let's make this bigger so we can see it. And then when it opened lower, this is part of our entry process. We didn't want to be buying it down here because we didn't know whether the bulls were still in control or not. But when they started bringing it back up through the previous day's close, what type of candle was it forming again? It was forming another green candle, which showed us immediately that the bulls were still there. That's where, if we were buying it today, that's where we would have stopped in to buy it, right at 6.5 or 650, because that tells us that this is confirming the signal and the bulls are still in the trade. Same scenario on LRN. Where did it move back to? Right smack dab to the 50-day moving average. And where did it break out? Through the 200, this downtrending channel, and staying well above the T-line. So where is this likely to move? Well, if this was wave one, which is approximately $6, this should take us probably up into the $22 range. Now, will it take us to the $22 range? I have no earthly idea, but that's usually the probabilities are wave 3 is going to be the same as wave 1. That's just because that's how human nature works. Mike is another one that's been a slow uptrend, but it closed just below the T-line today. But notice when it did close back below the T-line, the doji was telling us there wasn't a real definite selling mode here. But it still makes tomorrow's trading very simple. If they open this lower, you want to close it out. You can always buy it back. And that was somewhat the same scenario as what we saw in Cyber this morning, that when it opened lower down here, it was time to get out of this trade. Because when it opened down here, after a left-right combo, the only thing it had going for it was it had been in an uptrend. Where was it likely to come back to if it opened lower? Probably back to the 50. But here's something that I've had to ingrain into my own discipline, that if I closed out here, which in this case I didn't because I didn't have time to, and it started coming back up, I'm willing to buy it back because it's doing exactly what the initial trend was telling us it was going to be doing, and it also told us they weren't closing below the T-line. So if I've closed out a position here, I have no ego problems with buying it back when it was doing what the initial analysis told us it should be doing. And the reason I buy it back is because when I had my emotions involved prior to candlesticks coming along, and even after candlesticks came along, I wouldn't sell something and then buy it back because they weren't going to fool me twice. If they got me out of the trade, I wasn't going to get back in because I knew as soon as I got back in, they were going to take it right back down and fool me again. Now I at least know what the patterns are telling us. Here's the scoop pattern. When we bought FMSA, bullish engulfing, close above the T-line. And when it did this, what else could we analyze? We pretty much had a flat handle over here. What should we expect coming out of a scoop pattern? That strong slingshot effect. Now this is where you start anticipating, not anticipating, but expecting what should happen in a price pattern. That's step one, getting into the right trades at the right time. Step two is when do you get out? And that becomes your trend analysis, knowing where your stochastics are and what type of signals you're seeing. So we've seen a couple of little dojis up here. After a good percentage move, what do we need to expect at this point? That if they are still taking this higher, they'll still show good strength. If they start selling this off after a couple of days of indecisions, we ought to have a stop somewhere that tells us that's where the bears are taking control. So I'd put a stop just below yesterday's or Friday's low of the doji, because that tells me if they started trading down from a doji, little shooting star doji, and started trading this way, where's our expectation of the price move? Right back to the T-line. I want to take profits here. What's my worst case scenario? It comes back to the T-line and bounces back up. I can always buy it back if I recognize a J-hook pattern in progress. So this is not only to show when to get into a position, but also when to get out and when to get back into a position based upon knowing what type of price patterns to be expecting. For example, Court bought some today and even held on to it even though it came back, because what's still our pattern trajectory? Still a J-hook pattern coming out of a big fry pan bottom. What do we expect from this whole setup? What we call the classic, the fry pan bottom breakout, J-hook pattern. Where's our next expected target? Well, if this moved from 3 1/4 to, say, 6, this should move up into about the, let's say, 8 1/2 to 8 3/4 range. Well, Cyber's still on a downtrend. Yeah, I'd still be a buyer in a downtrend last 4 days. Am I looking at the same chart? Are you still in a downtrend last 4 days? Are you a buyer on a positive? I'd be a buyer on a positive open, and it's really not been in a downtrend over the last 4 days. It's still, up until Friday, it still closed right at the T-line. It still hasn't closed below the T-line. Do the upside wicks worry you on court? No, they make me aware. That's not going to work. They make me aware of what I should be doing. If this is in a J-hook pattern, what should we see tomorrow? We should see that it probably opens flat or positive. Notice where it didn't trade today, below the 3T line. As long as we know that it's still above the 3T line, there's one assumption we have to make. Two assumptions. One, we're still above the T line, obviously. And two, this is still in a strong uptrend because they're still trading above the 3T line. So we know what to expect from this pattern. We should be expecting more upside. If it opens lower, what's our next expectation? That they're going to bring it back at least down to test the T line. But we don't know whether it's going to hold there. So opening lower, and that would also be a function of the markets showing that it's selling off. And this opening lower, yes, what's that tell us about our trajectory of this J-hook pattern? That it's flattening out. We probably don't want to be in this anymore until the next buy signal. What else did we do? Oh, we got ADXS, and the question is, should we be taking profits with us getting up in the overbought area and seeing a doji? So that's only one part of the analysis. There's the rest of the analysis is, where did it close? It still closed above the 3T line, let alone the T line. Two, what type of pattern is coming out? Kind of a J-hook pattern. So if we're in a J-hook pattern, what should we expect in here? We should be expecting the same movement as this. So we've got two pieces of evidence that says the bulls haven't given up yet, or the bears haven't taken control. So where's my logical stop? I put a stop. They shouldn't trade this back below today's low. If they do, where do we expect it to be going? Probably back to the T line. But the stochastics are showing going down on court. Yeah, but not with any great urgency. As we can see right in here, the stochastics are going down, but not with any great urgency. I'd still be, you could be wary, but I still wouldn't be too concerned yet, because we know what this pattern should be telling us. Now, if it does fail tomorrow, we close. And remember, you close out a signal or a pattern that's not working, because as long as you go into your investing with a frame of mind that probably about 1/3 of your trades aren't going to work, that puts you in a whole different perspective of not hoping that every trade you put on is going to go up, but with the expectation that if this pattern doesn't work, you close out the position immediately and move on to something else. That doesn't mean that if this one closed out or started trading lower tomorrow, I got out and then turned right around and came back up and continued this J-hook pattern, that wouldn't get right back in. And this is a case too. I don't mind selling out and buying back in 30 cents higher, knowing that it's moving in the right directions. because I'm not in this for 30 cents. I'm in this for another $3 to the upside. Sound is breaking up. Okay, I'll stop hemming and hawing probably. Let's see, we did cyber. Cyber, yes. I would be a buyer of this one on positive trading because where do I expect my next little price move even on a short-term basis? Right to the top of the trend channel, which means they could run this up another 5 points very quickly. Do you trade that tightly on your option trades? Yes. Remember, an option trade is not anything more than buying a stock position with a different method. Instead of buying the stock, I'm buying the options. So if the stock price, the reason I'm buying that stock or buying those options is based upon what the stock price is doing. And if the stock price is going against what it should be, that means you shouldn't be in those options. You close out the options. Hold on to the individual ones. We'll get to them when I tell Jim to do the double line, but that's going to be a while because we got a ton of stuff to look at. Coop, we also re-recommended because Coop is in this nice fry pan bottom, little bobble. Where's our next target? At least to fill the gap, and then if it gets up there, there's good possibility it can go to the 200-day moving average. So remember, this is what we're looking for. Is that evidence that the pattern is being developed? And why do we buy patterns? Because human nature works the same way year after year, decade after decade, century after century. Human nature works the same way. Nubo was one that was pointed out. Look at the left-right combo down here. And then positive trading breaking this out, telling us we're in another wave. Wave about that same magnitude could take you up close to the $10 range very quickly. And IMAX also was one that was pointed out in the chat room. Notice the flutter kicker. And they've gapping this up through the resistance level. So we got wave 1, wave 2, right back to the 50-day moving average. Wave 3 should be the same magnitude as this, which was approximately 6 points. I'd look for this to go into the $41 area. Let's see. MCR, nice fry pan bottom. Wouldn't have any qualms about buying this one on positive trading. And how long do I hold it? As long as it doesn't close back below the T-line. Would you buy Coop right here? Yes, that's why we recommended it today, and I'd still be buying it. This is a pattern. This is telling you that if this is wave 1, wave 3 price should take you up pretty close to the 200-day moving average. Sabre. Oh, Sabre was one that if you're trading, even day trading, notice what we have here, bullish engulfing, our classic fry pan bottom J-hook pattern with a doji right here at the breakout level makes this a very high probability trade that if this opens positive with our simple rule of the doji that it's going to trade in the direction of how they open it, more than likely it's going to have a candle the same magnitude as this candle, a doji sandwich, breaking out, confirming the doji or the J-hook pattern, which tells us if this, again, is wave 1, wave 3, that same magnitude, this allows you to analyze exactly when the appropriate time to get into a trade. Whether you're trading stocks and or options, it gets you in right at the right time with a high probability trade setup. Tidewater, there's your left-right combo. There's your bullish confirmation. Again, if it opens positive, they're still taking this higher. I would suspect your next target would be the 50-day moving average. How high is this bounce? That's what I'm kind of anticipating. But somebody asked, do you use Fibonacci numbers or support and resistance levels? I use everything I can think of to tell me where should I start watching for candlestick sell signals. So if I threw Fibonacci number or retracement on here, and it's going to be, let's say, right up here, and right down here. Well, there's all the retracement numbers. So where's my most likely? Maybe right in here where the 50% retracement and the 50-day moving average are coming together. Would you put a stop out at the low of the doji made today if Sabre fails? Let me clear this. Let me clear this. Okay. Yeah, if they came back down, now first of all, if it opened lower, I wouldn't be buying it because that's telling me they didn't break out. If it opened positive and started trading positive, I would probably still put my stop at today's close or open, which doesn't really matter, about the same level, because the rationale is if this opens positive, what should we be expecting? We should be expecting a positive trade out of this. If it opened positive and went this way, what's it telling us? They aren't breaking out like we expected. Close out the position. Let's see. CTRP. This is that slow curve. And this was one I think I was illustrating today that if I see a slow curve setting up, right near the end of the day, I'll buy some calls because one of two things are going to happen. Either it fizzles and doesn't do anything, so I close out the calls that hopefully close to break even, or if this works, it's going to be a big move along the same magnitude as that. That slow curve is just a buildup of a very quick, high-powered trade, and it works consistently well. Lumber liquidators. When it got dashed down here, you can see that there's been a lot of indecisive trading, but notice what's happening. Fry pan bottom. I'd be ready to start seeing when the investor sentiment changes on this, and it may be that whatever, I forget whether they're being sued or whatever for something, that if that all gets cleared up, people are going to be back in here buying pretty strong again. Hill, look for a J-hook pattern. And you can, and the reason you want to look for a J-hook pattern is what was the prerequisite? A very strong price move. And notice what it hasn't been able to do. They haven't been able to close this, even though they open it lower, they haven't been able to close it below the T-line. That tells me if they start trading positive from this little area, that the J-hook pattern's in progress. You want to be a buyer. Let's see, we did that one. And AMRN was another one that was touted around quite a bit in the chat room today. Another J-hook pattern classic. There's your fry pan bottom. And what do we expect coming out of a strong fry pan bottom? A strong price move. And what started this strong price move? That little doji gap up. And where did they gap up? Right smack dab where this fry pan bottom started. And what resistance did they go through? They went through the 200 very quickly. When was it time to sell? Remember, the further away you move from the T-line, the higher the probability they're going to come back and test it. So when you had a couple of days like this and then you saw it gap open, remember what our stop loss process is. If it starts trading positive, you put your stop right below where it opens. If you don't have time to do that, you put your stop loss at where it closed the night before, because if it comes back below that level, that means after gapping it up and they could come back down through that level, the bears have taken control. Tesla came out with a good sales report. There's your doji gap up through this downtrending channel. Next likely target after this gap up is the 200-day moving average. Mattel had some news. I didn't see what it was, but it has a good chart now because there's your kicker signal. Make this bigger. There's your kicker signal up through the T-line for a trade. Where do you expect it to move? Probably up at least to the 50-day moving average. And DYAX, what do we expect after a big gap up? The 45-degree. You just stay long until you see a sell signal on this one. S-Fund, that's the bobble. Came up, failed at the 50, pulled back. Notice what they couldn't do. They couldn't close it below the T-line. Now they've come back up. So if this opens positive, your bobble's confirming, which tells you the J-hook pattern's in progress. You're up here somewhere. Let's see. MBT. Kicker signal, trend kicker. Whoops. And where did the trend kicker occur? Right where the fry pan bottom started. What do we know about a trend kicker? There's going to be more upside. If there's more upside, what do we know about a fry pan bottom? That it's going to break out and have a very strong price move. And INO. Another bobble setup where you could be buying this one, especially if it comes back up toward the 200 and then just see what it does once it gets there. Couple shorts real quick before I go into the meat of what we're going to be looking at today is AMAT, Applied Material. If this opens lower tomorrow on a bearish doji sandwich, you've got a bearish J-hook pattern, and it's telling you that the support level is not going to be acting as support anymore. Do you still use the T-line as a stop when other resistant lines are around? Do you still use the T-line? In this case, well, more than likely by tomorrow, the T-line will be back up to the pretty close to the 50. So if this opened positive and closed back below the 50, I'd be back out of it. Why is the free video of the month not changed? I'll have to ask Abe. So if it closes back below the 50, why were we buying this? Because it broke up through the 50, and if it opened positive, it was breaking out through this level and the 50. If it closed back below the 50, what's it telling us? But it's not breaking out through this level or the 50. You close it right back out again. And Cree, you stay short. Today was not a signal. This is, I think, what we call an in neck, where even though they brought it open lower and brought it back up, they still didn't bring it up above the halfway point of this candle. So it's not a signal. If it opens lower tomorrow, you can still be shorting it. And ANET, another one. And why do these charts keep getting smaller when I want them bigger? Notice what happened when they came up here to the T-line. Did a doji Harami, then a gap down, telling us this downtrending channel is still in progress. And if this opened lower tomorrow, with stochastic still heading down, what type of pattern do we expect? Probably a bearish doji sandwich. And what do we expect from a bearish doji sandwich? More downside. AB, yes. If you can see a chart pattern where there isn't any resistance, yeah, that's usually better than seeing one where it might have a resistance level just above the breakout area. All right, so we looked at gold, and this is where you kind of observe the obvious, that if gold prices are moving up, then that means the gold stocks are moving up. So on something like SA, this becomes an excellent buy because what type of signal is it telling us? There's your doji gap up out of the oversold area. That's your best friend. Where did it break out? Through this downtrending channel, and it gapped up through the T-line. Where's at least our first target, the 50, and then possibly higher. Why possibly higher? Because this is one of your strongest, most consistent trend reversal signals is the doji gap up, your best friend. And reason we call it the best friend is because they occur quite often, and they produce very good results. JNUG, which is also telling us, oh, Shazam, look at this. That you had that kind of that little stutter step, and now they're taking it back up. First target should be the 50, which also would be filling this gap. So at least you know you have a few days of upside in the little ETFs, which means individual stocks are going to act strong. Let's see. And Nugget. Oh, how did I goof that up? I don't know what I did there. AU. Kind of a little trend kicker, J-hook pattern. Again, a few more days at least to the upside as long as gold prices and silver prices continue higher. PAS, there's that trend kicker. Next likely target is up to the 50-day moving average. Again, this is that's what happened. All right, thanks. I couldn't figure out how I could goof up 4 letters so easily. Nugget. Again, that doji gap up, and very simple. If this opens positive tomorrow, which will also, you just have to keep an eye on what the gold prices are doing. But if gold prices are up tomorrow and this opens positive, there's our next likely target. Now, if we can analyze what people are basing their decisions on, like the crude oil prices that came up almost $3 today. This is the June contract. The closest one right now, which is the May contract, also has that little bobble pattern. And what do we expect out of this type of pattern? More upside. If we have more upside, telling us this downtrending channel is being breached, that tells us everybody's psychology about stocks has changed. Here's an excellent chart. OAS, fry pan bottom breakout right at the 50. Good likelihood they could bring this right back up into the $19, $20 area. Let's see. And we've been staying long in Whiting. Again, both on the short-term trading as well as a long-term hold. So the reason we're in it for long-term is because the longer term you're in something, the more you want to look into the fundamentals of why everybody is buying it. And again, Whiting being right in the middle of the Balkan field up there in North Dakota. This dropped because of a new offering. But notice which way it was moving in the very before the new offering. It was in an uptrend. Once the knee-jerk reaction was over, which way are they taking it again? They're taking it right back up. The investor sentiment hadn't changed. Just the supply and demand for a few days did. Now investor sentiment is kicking back in. We also recommended a little bit ago CPE, because that was coming out of that scoop pattern. Now you have a J-hook pattern setting up, or your bobble. If this moves opens positive tomorrow, your doji sandwich is telling you the J-hook pattern is still confirming. So if you can start seeing the whole industry moving with a lot of good charts, this is Rosetta, ROSE. I wouldn't be afraid to be buying this one on positive trading tomorrow, coming out of the fry pan bottom and breaking through the 50. MTDR. Notice where it broke out, right at the 200 and broke out through this level. Expect more upside. So the reason I'm showing, what one was that? MTDR. Showing different ones is not because any one is better than the others. Some people would rather be buying the bigger names. This is Weatherford coming out of a fry pan bottom. Expect the 200-day moving average. Others want the highest leverage, or maybe a small stock, or even just buying the oil shares themselves. This is UCO. also doing the same as the oil prices, because it is the oil prices, the bobble and the breakout through this downtrending channel. We've been in LPI, so this is why maybe you don't buy LPI even though it's just in the process of breaking out. But there's other stocks out there that where your upside potential or your downside risk hasn't been built in yet, that you can be buying something knowing what type of pattern is coming out of. SN, for example, just now coming out of a fry pan bottom. Where's the first target? Right up here. And if it breaks through there, where do you think it's going? Up here to the 200-day moving average. Let's see, that was SN. SDRL. So these are all oils, and this is, again, where you kind of observe the obvious. If all the oil good, there's lots of good looking chart patterns in the oils, that means it's not one or two stocks that are being bought. They're buying that whole industry across the board. So if you can put all your stars in alignment, that if the market's moving up and the oil sector is moving up, oil prices are moving up, we want to find the best charts in that sector, because that's, again, putting everything in our favor, that we're going to be in the right place at the right time, or at least be in positions where we're going to have a good probability of making money based upon everybody's buying them right now. We're just trying to find the best ones to buy. There's another little scoop pattern in Rowan, RDC. Obvious target is the 50-day moving average. Now, when I say the first target are these moving averages, or the next moving average, that's the target. Then once it gets there, we'll see what it does once it gets to that level. If they break through, that means we now have a new target. Yes, all these sessions on Monday and Thursday night are recorded, so you can doze off and still not miss very much. ESV, another fry pan bottom. BTE, again, some people want to stay with the bigger names. That's still a good-looking chart. And again, some of these charts, if oil breaks to the upside for the next 3 or 4 days, some of these charts that have been battered down from down 60–80% over the last 12 months, they move from here. They could move up 100% from where you're buying them very quickly without having a real big percentage retracement move. YPF, nice steady uptrend. Target pretty much the 200-day moving average. And Helix, very simple. If this opens positive tomorrow, you want to be buying immediately, because the next target comes into effect, which is coming up here to fill the gap. So this is just kind of just an observation that you want to be finding things that everybody's buying. And that sounds pretty simplistic, but if we can see the charts much more easily to see what everybody's buying, we could be in there early. And then how long do we hold? As long as we don't see a sell signal. In a lot of cases, just a sell signal that might bring you back to a support level. Mike, that's in my case, if I've got 10 positions on and I see that the oil sector and the gold sector are acting well, I might have 6 of my 10 positions, three golds, 3 oils, in my 10 position portfolio, and then the other 4 scattered about just because those are better or good looking charts. So when people say, well, shouldn't you diversify? You should if you're not paying attention to your portfolio. If you're buying things and then just letting it sit there, if you want to be protected, you better diversify. That's kind of what I'd call the vanilla way to invest. And that's what all the money managers want you to do. because more than likely most money managers don't have any idea which stocks or sectors will go up or down at any given time. Their idea is you buy stuff and hold it long term, and hopefully all boats rise over the long term. If you're sitting here using candlestick charts, you pretty much know what's working right now, or maybe something to invest in over the next 2 months. And then in 2 months from now, you might not be in the oils, or you may not be in the gold. You might then be in 2 other sectors. What was I doing? Oh, so also if you can recognize the patterns or know what should happen based upon human reaction, such as when they come out with new stock offerings, what's the initial reaction? They knock it down. And after a few days, they start thinking, oh, yeah, well, they need more money, so the smart money starts coming back in. So that was the case while we were buying Whiting again after the new offering, because this is the expectation that it's going to continue the trend that was in progress before they made that announcement. This is why I'm keeping an eye on CNAT. CNAT had broken out nicely and then pulled back to the T-line, and then they announced the new offering. As soon as the selling is over, this one should start moving back up pretty nicely. Where do you put your stop on Whiting? Right now, on a trade basis, we know that Whiting has come up here and hit the 50. So what do we want to see tomorrow? We want to see that they aren't backing away. If they are, what type of pattern are we anticipating? A bobble, which means they're going to come back and test the T-line. So you close it out, and then you just wait for the buy-in to start back in, and you can buy it back. So right now, my stop probably wouldn't have a stop. I'd be watching to see if they open this lower tomorrow. And again, this will also be a function of what does crude oil prices do tomorrow. If we wake up tomorrow, right now they're trading off 43 cents. But let's say tomorrow we see that's down $1.50 from where it closed today. And Whiting opens down 30 cents. I'd probably close out the position and wait to see when things start picking back up, which in that case, looking for long-term on Whiting. Humbug. Just 3 little... I probably wouldn't want to see it come back below the $30 range. That would tell me that this is now a big rollover versus a scoop type pattern. All right, so your best friends. You'll probably see this one recommended tomorrow because of the Doji Gap Up, SA. CDE. CDE. Another best friend, double bottom. Wouldn't be afraid to be buying this one on positive trading. Remember, the best friend usually gives you very, very strong price moves. And ENTA. There's your little best friend. Gap up. And what type of pattern? Scoop pattern. Slingshot effect. I'd probably at least be looking for the 200-day moving average. All right, I guess that's about all I've got tonight. So are there any general questions on candlesticks? What time frame do you use to see how a position opens? 5 minutes, 10 minutes? If I'm looking at the... I'm usually looking at the 10-minute chart. But obviously when the market opens, less than 10 minutes, you're only going to have one chart on the 10 minutes. So if I'm anxious to buy something, then I flip to the 5-minute chart, and what was I doing? I don't want that. I'll flip to the 5-minute chart, and the 5-minute chart looks like it's setting up well. Then I'll flip right down to the 1-minute chart. So let's say I was looking to buy this stock, but this is actually crude oil because it's trading live right now. I go to my 10-minute chart, and say, all right, what's my 10-minute chart doing? Well, we're in the oversold area. It hasn't shown any buy yet, but let's say all of a sudden we see the buying come in back up above the T-line. Then I flip down to my 5-minute chart and say, well, the 5-minute chart's also coming up. So if it looks like it's getting a little bit good, then I flip down to my 1-minute chart. Say, oh, what's happening in the 1-minute chart? Well, if I can start seeing that on the 1-minute chart, it's starting to move up, I can pretty well extrapolate that the 5-minute chart is starting to move up above the T-line. And if the 5-minute chart is moving up, that means my 10-minute chart should be setting up pretty nicely. Abraham is our tech guy that if you ever have run into problems or can't find something on the website, you email Abraham at Candlestick Forum. When shorting, I know you have mentioned that it is opposite of going long, but I would like your understanding on short covering properly, in particular our ARCB. I had shorted previous but covered it around 38. Then it went lower. Can you explain when you go back in and short again? All right. If you're buying based upon the chart pattern, which this was a good short because came down, came up to the T-line, failed, and it came back up today. And this is why you always wait till the end of the day, because if you're already in a downtrend, everything that happens during the day is just noise. It's what happens at the end of the day that the final decision telling you what to do, or what that chart's going to look like. So if it opens lower tomorrow, I'd still be shorting because this is wave 1, wave 2, wave 3, somewhere down in this range. Watching the pivotal candle, do you have a target date for issuing your first trades using options with candlesticks? Malcolm, the answer is yes, but I don't know what the target date is. You're probably going to get another couple of these little videos that they had me do to kind of give you all the details. So anyways, keep an eye on it. And it's not just me. It's me telling some professional traders what parameters to be looking at, and then they will let everybody know what trades and what type of trades to put on. Which is more important, candlestick indicator or pattern? Can you trade one without the other? Elsie, it's the combination of both. And which one can we let's see. All right. It's a combination of both. First of all, we know what should happen after a doji. If it opens positive, we're going to have a doji sandwich. So that's the signal. Then what would the pattern be? Well, we can see we have that fry pan bottom J-hook pattern, our classic. So that the combination of knowing what the pattern is and what an individual signal is doing is that much more, let's say, credence for getting into a position. So it's not like you're having to learn the patterns, which is a whole slew, and the signals, which is another whole learning process. You're only learning basically 6 long and 6 short signals, and you're only learning maybe 5 or 6 patterns. And the most common right now is the fry pan bottom and the J-hook. Occasionally you'll see the scoop pattern. Occasionally you see the cradle pattern, the belt hold, and I know there's one more, but it's not coming to me. So it's not like you're having to learn a whole heck of a lot of patterns. And the reason you want to learn the patterns is because that's what human nature does over and over. That's why there are patterns. So more important, your bricks and mortar or your bricks or candlesticks are the signals themselves. And then those are the words. And then when the words all get in order, that's your sentence or that's your pattern. do you consider overall market direction and what time frame? And when deciding to buy or sell short? Yes, I consider the overall market pattern, whether we're in an uptrend or a downtrend or sideways. If we're sideways like we are in the current market, that doesn't prohibit us from finding the strong sectors. We know in our illustrations tonight that the bullish sectors right now are the golds and the oils. I'm not looking so much at the shorts, even though there are some shorts, but they're I'd have a few short positions on. There's Cree, there's AMAT. We had a couple more. But right now, I'd be predominantly long because there are some very good price patterns on the long side. So, yes, the first analysis I do is which way is the market going. Then my portfolio will probably be oriented toward that direction. Are the stock picks in your pivotal cash position the same as the ones you would unless yes? I'm pretty sure yes. They might be bigger ones, meaning the bigger stocks, though in that because of the option orientation. Do all yes, and that would be the target. I mean, this is your pattern. There's your slow curve. There's your potential target is coming back up into that area. Was ER? Yeah, remember, if that was earnings related, that was that quarter. Now the outlook is what's happening for the next quarter. Is the combination of a fry pan bottom with a J-hook equivalent to a cup and handle? I always get confused with this terminology. No, the fry pan bottom with a J-hook is what we call the classic. And usually the J-hook pattern in the classic is going to be occurring much higher than the fry pan bottom. Whereas a cup and handle, which one was the cup and handle? Cup and handle usually are occurring right about the same level. That when you come to the end of the fry pan bottom and it doesn't break out, the handle pulls back a little bit and then comes back up, but it's right there at the same level as the top of the fry pan bottom. If a stock is moving up, how do you determine whether to enter a long even after the stock has moved up a day or two or three or four such? By what your upside potential is and how much you're into that pattern. Remember, the signal is the beginning of that pattern. So a lot of people say, well, it's already had a nice big move on this one. Should I be buying? Well, that big move is usually, was it Coop? Oh, that's right. Coop was the cup and handle. That buy signal may be a strong move. And remember, the stronger the signal, the bigger the signal, the higher the probability there's been a change of investor sentiment. That's kind of a cup and handle because when you came out of the fry pan bottom, you really didn't move very much. So you can see there's kind of a cup and a handle, whereas a classic would be a fry pan bottom, strong price move, and then the J-hook pattern, which I think is more illustrated over in Court. You can see you had this big fry pan bottom, strong price move, and notice the J-hook is way well above the fry pan bottom. Looking for credit spreads. I just use the indexes. Okay. Did the rice traders even have a cup and handle pattern? Don M., I don't know. I'm sure they would have called it something different, or they would have analyzed it as a different pattern. Remember, the bullish and bearish harami is Japanese terms, but the same pattern in Western terminology is an inside day. So yeah, I'm sure they recognize cup and handle. They just probably had different names for it. Okay, Jim, go ahead and do the double line. And in 4.2 seconds, do the second double line. We should get most of the ones that everybody's looking for at that point. Okay. All right. SNE. Sony. Sony traded overseas. That's why you get pretty choppy, but you are now in wave 3. At this point, I would just stay long as it stays above the T line. And Chicago Bridge, stay long on this one. Still, I'd like to make these charts bigger. That's kind of your little J-hook pattern, Morningstar signal. At least look for the 200-day moving average as a target. Captain, yes, it went up from 740 to about 810. Had a nice profit, but by end of day, it was down to 720. Lost profits and had loss. Can you give us how you would have handled? Still would have held on to it. Is that? That doesn't look the same. Am I doing? Is that the one that? Anyways, you're still in the fry pan bottom trajectory and you still didn't close below the 3T line. If it opens lower, you close it out because now it's probably going to come back and test the T line. If it opens flat and starts trading higher, you stay with it because your fry pan bottom is still in progress. So there are going to be times, again, this is where that's the exact question you want to be asking, Ed, is what do you do with a pattern that didn't work quite out as what you expected. However, it didn't break the pattern. You still give it another day and make sure it doesn't break this fry pan bottom trajectory. Ovis has gotten the woo-woo kicked out of it here for the last few days, but notice it's starting to show it didn't do a signal yesterday or on Friday. That's not a signal. That's just an update and a downtrend. Now you've got a doji hammer in the oversold area. If it opens positive tomorrow, you can be buying with the first expectation of a bounce back up to the at least the T line and then see if it moves past there. Kindred, all you can do on this one is stay long as it stays above the T line. Ecom still doesn't have anything real exciting there. You do have an inverted hammer. You can be buying this one on positive trading, but I'd be more apt to want to see it get up through the T line and the 50 tomorrow to confirm that inverted hammer. Fold just can't close below the T line. Staying up very nicely. I would be a buyer on this one on any signs of strength from here. And Vive, Morningstar signal, another one you can be buying on positive trading, which would basically tell you after the signal or the Morningstar signal being confirmed, it would be coming up through the T line. Yahoo, I wouldn't be trading Yahoo one way or the other. It's just it's sideways. And Apple had a nice bullish left-right combo today. This one you can be buying on positive trading. That would be a good indication that wave 3 would be in progress, and that's probably going to be better confirmed if we wake up tomorrow and see that the pre-market futures are showing the markets still trading positive or heading positive. You definitely want to be buying Apple at that point. ACAD, nothing yet until it can get back up above the T line. Even though you're seeing bottoming action, on any time you see bottoming action, you still want to have the bullish confirmation to show the bulls have stepped in. GNW, that's a good-looking little chart with another slow curve, kind of a double bottom. Make this bigger. I would be buying this one. Notice they opened it lower and took it right back up again. Wouldn't be afraid to be buying that one on positive trading tomorrow. CLDX, nothing here. Wouldn't be long, and I wouldn't be short. I would be shorting this one. I would be shorting this one on weakness tomorrow, but be very diligent to see what it does once it gets to the 50, which was the last support level. Oh, that prior one, GNW. When you see them open it lower and trade it back up, that means all there was some profit taken on the open, and they started right back up again. Oh, not this one, but VHC did that today. Opened lower and came right back up again. I'd be a buyer of this one. CRMD closed right on the T-line, but this only has one option tomorrow, and that is it has to open positive and trade positive to stay in it. BTAE, nice big breakout. Look for a 45 degree to come off of here. Con has just been moving up steadily. You just stay long as it stays above the T-line. You had kind of that T-line crunch, pushing it up through the resistance level. Still a good-looking chart. Just stay with it. Did we do Captain? Thought we did. Where did you put your stop? I wouldn't. Well, if you're going to hold on to it, it definitely should not trade back below the T-line. And probably at this point, if it started trading back below today's low, I'd come out of it and then wait to get back in it again. And SSH, you can buy this one. Just make sure your volume is good. More than likely, the 50 or the 200 is the target. CNA, nothing here yet. You need to see bullish confirmation. This, if it opened positive tomorrow, you can be buying it. ABR, nothing exciting here, but as a realty trust, I would guess there's a dividend. You should only be trading this one based on the dividend play. Ah, good sneeze. Uh-oh. Whoops, I did it wrong. MLPY. Morgan Stanley. That's a high income? Yeah, nothing exciting here because of its income characteristics. I would just stay with it. NVG. Just stay long on this one. That's a muni fund. Yeah, these aren't exciting. These are more long-term portfolio holds. SBS, another one you can stay long on. Nice little double bottom action. And two, I imagine this is another dividend play. I just stay long on this one. We did HLX. HOX, you can buy this one if it opens positive tomorrow, taking you up through the T-line. We did Apple. Ford, get ready to buy this one. Nothing exciting yet, but as long as it stays above the T-line for the long-term hold, you want to stay with it. Let's see. Oh, maybe that was it. Does that sound better now? All right. And SanDisk. Yeah. SanDisk. Another one that you want to see what it does once it gets to the T-line. If it breaks through, then you're going to come back up here into this area and test those moving averages. But it has to break through. Otherwise, there's nothing there yet to show that the bulls are in control. ACCO, stay long. Little left-right combo today. Rite Aid, all you can do with this one is stay long as it stays above the T-line, and this is that scoop pattern breakout. The biotechs trying to support. You did a little inverted hammer today. Biotechs will start coming back if this moves back up above the T-line off the 50. Delta stays short until you see a buy signal. Gene should have probably been closed out today, but if you didn't, it has to open positive tomorrow and trade positive. If it opens lower, it's going to be back in this drift again that it failed to break out. In DDD, might be moving again. It hasn't been very exciting here for a while. Let's make it a little bit more exciting. You're still caught in this downtrend. You can buy this. You just be very conscious of what it does once they hit the 50. PKI, a J-hook pattern in progress, left-right combo. You can buy this one on positive trading using the close back below the T-line as your stop. Red Hat, same scenario, J-hook pattern in the making. You can be buying this one. This one started up with that kicker signal. Should have some more upside to it. And GWPH, stay long as it stays above the T-line. But you definitely want to see this open positive after the little inverted hammer signal today. If it opens lower, you close out the position. DFS, nothing here to get excited about. You're still on a downtrend, stuck below the T-line, or stuck below the 50. If you own it, it has to open positive and trade positive, and it has to get back up through the 50 very quickly. Boston Beer, sideways. I wouldn't be long or short this one. When trading long-term accounts, is it better to use the weekly charts instead of the daily charts when using unsettled funds? You can. And I have got that written up. We're going to be working on that pretty soon for the people in the long-term picks area on what criteria you want to use when you're looking at a little bit longer term situations. Russell 2000, just stay long right now, like the NASDAQ. See, we did SanDisk, we did Gene. Priceline. Priceline, you can be buying this one. It broke the downtrending channel. And Tesla, you can be buying this one on positive trading after the gap up today and staying above the 50. AG has to get up through the 50. And it has to stay above the T-line, has to get through the 50, and then it has to get through this. I'd rather pay, this is a silver stock. Yeah, if it opens and starts coming up through the 50, you can buy it, and then you just have to watch to see what it does at the next resistance level. And EXK, same scenario. Just make sure your volume is good on this one. Philip Morris. You can be buying this one. Not a very active price mover, but it should come back up to the 50-day moving average. Facebook did a little belt hold bullish engulfing today. You can buy this one on positive trading with the anticipation that your uptrending channel is still in progress, that you should be heading now up toward the top of the trend channel. Let's see. Natural gas, just flatter than a pancake. I wouldn't be long or short natural gas right now. SUNY, just stay long as it stays above the T-line. Nice steady eddy. QIHU had there's your T-line crunch bobble. This one you can get ready to buy on positive trading tomorrow. That's a perfect setup for a positive open. Now you know at least they're going to pop it up here to fill the gap right here, and then more than likely above that level. That's a good looking chart. And FXE, Euro, is that the Euro? It still needs to get through the 50 to do anything significant. This one's having trouble. It has to open positive. If you're long, it has to open positive tomorrow. If it opens lower, you're still caught in this sideways move. Let's see if we can make this more exciting. Nah, can't. If I was buying this, I'd rather pay $3.95 for it, knowing that it broke out to the upside. IGT. This one has to open positive if you own it. I wouldn't have owned this one because it didn't open correctly after the gap up. But if you bought it yesterday and it closed right on the T line, it has to open positive. If it opens lower, you're still stuck in this sideways channel. BIS, the biotechs. Is that the shorts or the? Yeah, it's the short. Yes, it's still nothing there. You're caught in between the 50 and the T line, kind of implying that the biotechs are still getting a little bit soggy. Bass, one of the oils that has a good-looking chart, wouldn't be afraid to be buying this one. That's got a good percentage move potential. If it goes up to the 200, you're up 80%. Will you trace out the J-hook? I have trouble picking it out. Let's see. The J-hook, let's see, the only one I can remember offhand is Court. This is the fry pan bottom, a big, slow, rounding bottom. This is the J-hook, a strong price move. Then it pulls back in this little J, and then it hooks back up again. And this handle of this hook over here is usually the same magnitude as that move right there. And Tazar, nothing exciting here. You're in the bobble. I would rather pay $25.50 for it knowing that it broke out. SX, the S&P 500 came back up above the T-line today, but it's still in the wedge, so it has to break out fast, or it's still caught in the sideways wedge. This one, yes, this one had a good-looking chart. I skipped over this one because we had so many oils, but he had a little left-right combo, J-hook type pattern. Next target should be the 50. So I would be long this one or stay long until you see a sell signal, but just be conscious of what it does once it gets to the 50. Fossil, another one you can be buying on positive trading with the anticipation it's heading up to the 50, and it hits the 50. Now it's in the gap area. ACHN just has not ever been able to get out of its own way. I wouldn't be long or short this stock. Just nothing there. Bed Bath & Beyond. This one you can be buying. It's not a very exciting chart because of the lack of magnitude of price movement, but it is in a slow fry pan bottom. And Hawaiian Air is getting hit because I think crude oil prices are coming back up. You should have been out of this one today. When it closed right again on the T-line, Doji, it's going to move in the direction how they open it. When they open it lower, you should have closed it out. Now your anticipation should be that it's coming back to test the 50 one more time. And LCI, you should have been out a couple of days ago because it failed to stay up above the T-line. You can buy it back when it does close above the T-line. We did Facebook, Goog. Stay short until you see a buy signal. We did Cena, SFY. Another fry pan bottom. You can be buying this one on positive trading tomorrow. PRMW. This one you get ready to, well, you can't short it because it's, well, it is at 5. Here's a perfect example. When it's starting to move sideways, I usually close out the position. I'd rather, because at this point it's not telling us whether it's going up or down. Stochastics are in the overbought area. You definitely want to have a stop somewhere that tells you they've moved the wrong way. So the fact that they gapped this down on the open today, below the T-line, would have told me that would have been time to get out. Southwest. Stay short. Bearish J-hook pattern. First target right here, which gets you close enough to the 200 to probably test that. And GDX, stay long. Zynga. Zynga, not anything to really get excited about either. It's lost its trajectory here. It's at the resistance level. If you own it, it has to open positive tomorrow to stay in it. If it opens lower, you close it out because it's not, and then I'd put a buy stop at whatever that is, 290. Be ready to buy it if it came back up to that level. Captain, yes, Captain closed above the 3T, but you want to see this open positive. If it opens lower, you've got a left-right confirming, which means they're coming back a little bit. The 20-year notes still kind of sideways. It's got a support right here in the 50. Basically tells us the interest rates aren't moving one way or the other. Comstock, that's a nice little fry pan bottom. I'd be buying this one on positive trading tomorrow and just be conscious of what happens when it gets to the 50. My sound has dropped a bit. Oh, man. I'm confused. You said to follow a chart pattern, but you also mentioned to see if the market futures is opening positive. Which signal to follow, the stock or the market direction? SS, if you've got something that looks a little bit doubtful, and then you wake up and the pre-market futures are down, you can pretty much guess that your doubtful is going to be even more doubtful. You close it out. You use the pre-market futures to kind of give you a quicker view or a quicker reaction time to see what you should be doing with the position that you knew that might be questionable if it opened weaker the next day. And the pre-market futures are going to give you an indication of whether there's a more likelihood that it is going to open weaker. FBT, you can buy this one. Halliburton, you can buy this one also, coming out of this fry pan bottom. Same thing with Schlumberger, coming out of this fry pan bottom. Fluor. Ooh, the long-term picks area is on the site somewhere. CJ, you're going to have to email Abraham for that. What did we just do? Fluor. Fluor is breaking out. Not a very exciting stock percentage-wise. But if you like it, you can be buying this one on positive trading. And CNC, I think that was a bad print right there. But you're still in a steady eddy uptrend. You stay long as you stay above the T-line. And FNHC, this one was in a fry pan bottom. And as long as it stays above the T-line, you stay with it. So somebody said, well, don't you have a bearish engulfing signal? You do, but it needs to be confirmed, number one. And number two, it needs to break the trajectory of what the pattern is telling you. And the Russian index, is that the short? That's the bullish one. You can be long. Halo. Halo, you can stay long on this as long as it stays above the T-line. There was your Morningstar signal. There's your confirmation. Now you just have to watch because you've got kind of a little squeeze going on to see whether they're going to fail the 50 or break through the 50. PZE, another one you can be buying on positive trading after the left-right combo. If it opens positive, your J-hook pattern's in effect. Okay, if PRMW is only 44,000, I'd stay away from it. COT, this one you can buy, but it has to open positive tomorrow, doing a doji sandwich confirming your J-hook. And Zyop was getting hit here for the last few days. You stay short on Zyop, but if I was short right now with the stochastics in the oversold condition, I'd have my buy stop above today's high. If it came back up through there, that tells me the buyers are stepping in, at least for a bounce. AN, stay long, fry pan bottom, left-right combo at the breakout area. And isn't Halo a blue ice failure? Not yet. You don't have a sell signal here. You haven't seen that it's failed. For all you know, if they open this positive, it's more of a scoop pattern. So you still have to see a sell signal here, and you don't have a sell signal. It's a candidate, yes. If it closed back below the T-line, yes, now you have a blue ice failure, which would then make your 200-day moving average your next target. Okay, everybody walk the dog, feed the raccoons. We'll see everybody bright and early in the chat room. We'll see you then.